Well, let's move to Anuj, who's joining us in the studio to tell us how he's reading trade setup this Monday morning. Anuj?
Well, Nigel, the thing that we're watching out for, of course, is the Israel conflict, and let's see how that impacts. Normally, geopolitical concerns are actually the best buying opportunities. The best example is Russia-Ukraine war. Of course, first of all, your heart goes out to what's happening there. But from the market point of view, that's a bit of a buying opportunity. Of course, we need to see if crude is behaving itself. That, I think, is something we need to keep an eye on. As long as the Nifty is holding 19,255, I think the market's okay. The technical risk for the market is a halt at the falling 20-day exponential moving average, which is something that I've been pointing out. We closed right at the 20-day exponential moving average on Friday, which is placed at 19,654, and we closed at 19,653.5. The market breadth was quite strong on Friday, so that's a bit of a positive. Now, as far as today's outlook is concerned on the Nifty, the numbers I'm watching out for, first support is 19,589, which is Friday's low, and the bigger support is 19,477, which is options based. So, I mean, if the Nifty takes a support there, that perhaps could be your signal in terms of, perhaps an opportunity. On the higher side, the first resistance is 19,655, which is the falling 20-day exponential moving average, and the bigger resistance 19,768. I think it's the Bank Nifty which you want to keep an eye on. The first resistance over here is 44,534, the 10-day exponential moving average. The bigger is 44,634, 20-day exponential moving average. Even the 50-day exponential moving average is placed at 44,686, and there's call options based at 44,600. So there's a sort of a cluster of resistance on the Bank Nifty. If you take that out, then expect a big rally, but that's not the base case right now. On the lower side, the support comes in at 44,125 to 44,243, and the bigger support is 43,830 to 44,000. Just an aside, my sense is today in the first half, IT will outperform for two reasons. A, crude's gone up, so that's a bit of an algo trade, plus the TCS factor. But if the market has to recover, then in the second half, it's the Bank Nifty which has to take the lead. So let's see. You want to divide the trade in two halves today and see how the market's reacting and then take a call.
I think with IT also the thing, Anuj, is that the stocks have already run up quite a bit. So perhaps anticipating that this earnings season may not be as bad, maybe commentary can pick up, right? That's the narrative too.
Sonia, IT actually bottomed out in April, which is when you had the worst earnings. From April, when you had the Infosys shocker, the two stocks which have done the best are actually Infosys and TCS after that gap down. And the best sector has been IT. So in some sense, the market sort of moved on. Though TCS itself is now above its own median valuation, I think Infosys is almost getting there. Mid-cap IT is already there. So yes, from the risk-reward point of view, perhaps it doesn't make sense. And in any case, buyback provides a floor and not really a trigger for the rally. Let's see how it moves in today's trade.
That's well put, Anuj. I mean, maybe, the earnings season, by the way, is not expected to be great for IT services, right? But the TCS, at least for that stock, the buyback provides a bit of a support, bit of a floor there that we won't see large cuts or anything. That offer is there. Anuj, thanks for that. We'll take a quick commercial.